All right, so here we are done with the general ledger. We don't need it anymore for the financial statements. However, all we need is our financial forms, okay? Now, it's going to be a mixture between both the adjusted trial balance as well as the unadjusted trial balance, because there's just this one key component that you do need to have for the statement of cash flows. But for the rest of the remaining three financial statements, so your income statement, statement of equity, and your balance sheet, you're going to primarily use just your adjusted trial balance, okay? So once again, we're only going to be focusing on just using the main accounts, okay? So if we go ahead and dive right into our income statement, I've already kind of gave you a little brief guideline on what to do here, okay? Oh, a little too big there. So, here's a little brief guideline of what you're expected to know. All right, so once again, the income statement is going to be all of your total revenues, counter against them against all of your expenses. And you're going to get either a positive or negative number, which will determine whether you have a net loss or a net profit. Okay, so here we're going to start with the very first one, which is your operating income. So underneath that category of operating income, we have our sales. So in this case, how this works is we're not going to line them up as if left is your debits and right is your credits. We're going to just line them up according to calculations. So here, right? First things I want to do here is I want to recognize what my total sales was. So let's go ahead and take a look at my adjusted trial balance. What was my total sales? Okay, so I'm going to go locate my main account down below for my sales. Here's loans, sales. So what was my total amount of sales? Yes, 30,549. Now, things that counter against it is going to be a sales returns and sales discounts. So, what was my sales returns? 1996. And then lastly, what was my sales discount? So all I did was I just put a negative before the number. What was my sales discount? $1,980. So what I did was I self-referenced. I grabbed it from the actual worksheet and just put a negative in front of it, right, for these ones, because these ones are what decreases your sales. So my total sales here is just a simple formula. You can either, click on them and add plus, minus, whatever you want to do, or because the way I formatted it was I recognize that my sales is positive. I recognize that my returns are negative, and I recognize my discount is also a negative. So in this case, I'm going to go ahead and apply my equal sum and add these numbers up together. So what is going to be my total sales?
28,579.73.
Correct. That's your total sales or your total revenues that you've earned, okay? All right. Now we need to counter them against our cost of goods sold and our cost of materials, because these are directly correlated to our operating income, right? There are operating expenses that deal with our inventory on hand. So in this case, this is also going to subtract away from my sales. So let's go ahead and take a look at my total cost of goods sold. So in this case, I'm going to go to my adjusted trial balance, and I'm going to locate what was my total cost of goods sold. Okay, there you go. And then now I need to figure out what my cost of material was for. So again, back to my adjusted trial balance. What was my cost of material? Yes. Okay. Once again, when I add up these numbers, this is going to be your gross profit or your gross income. All right? Or I'm sorry, not gross income, gross profit. Okay? So here I'm going to take my 28,000. I'm going to counter it or subtract my 3,900 for my cost of goods sold with 1,040 for my cost of materials. So what is my total gross profit? $183?
23,546.
Oh, yeah. Perfect. Sorry, I heard wrong. Okay, so yeah, perfect. I heard the last 6 digits, or yeah, 3, 5, 4, 6, 43. So that is the total amount of generated income from just pure sales and my pure and countering against my actual cost of goods sold, which is directly correlated to my inventory. Now I need to figure out what were my operating expenses. So that means we're going to list out every single expense that is contributed to my operating expenses. So first things first, let me go ahead. Let me format this real quick because it's not formatted. So I'm going to highlight all of this, and I'm going to format it and left align them. Okay, so the first one that we got to see is what was our first monthly expenses for my operations. So let's go ahead and dive right here. My first one I have is going to be advertising expense. Okay, and how much was my advertising expense for? $180. Oh, advertising expense is $185. Oh, wait, no, 185 is this one. Okay. Advertising expense. Good. What's my next expense? Bank fees for how much? And then next is going to be my business expenses, right? Okay, and that is going to be for the total, oops, hold on, let me undo that. Oh, once again, undo. So my business expenses was for the amount of $1,282. Okay, what's next? Insurance expense. Yes, we don't have any freight expense right now. Insurance expense for a total of, yes. Okay, what's next? Labor. Okay, for a grand total of 2142. Good. All right, what's next? License and permit expense. Okay, for a total of 375. Okay. After that, I should have
Loss on disposal of assets, 2,000.
for 2,000. Good. And then I should have, what's next? Office supplies expense, okay, for the total of 70. Okay. And then I should have payroll expense for a total of, good, all right. And then what else do I have here? We have rent expense for a total of 15. And then we have bad debt expense
For 76.60.
for 76.60. I'm just going to cell reference everything. Okay. And then we have depreciation expense. Oh, wrong one. There we go. For a total of $625.95. Let's see, we're almost there. And then lastly, we have amortization expense for a total of $11.67. Okay, so that is our total operations. This is where we need to make sure that the money that we earned can cover our daily operations to run the business itself. So here on the left side, what you're going to do is you're going to equal sum all of your operating expenses. So okay, so what's my total operating expenses?
$10,127.07.
Yes. And if you wanted to, you could put a negative in front of the sum to give you negative 10,127.07. Okay? So that's all the operating expenses that I've encountered. So I'm going to go ahead and put total. I think I should have put this first. Total total operating expenses. Okay, and that's going to be right on line. Okay, and yes, this number should be here. Let me see if I can move it down. Nope, can't move it down. So equal negative sum okay. And then we have one more attribute, which is other income. All right, what other income do we have? Let me write here, other income. What's my other income? That's apart from operations. Okay, let's take a look at our adjusted trial balance and let's figure it out. Under my sales or under my revenues, right? I've encountered one extra piece of income. Delivery income. That is correct. So that's going to be considered other income. So let me go ahead and copy that over here, delivery income, for a total of, how much was my delivery income for? $300. Mm-hmm. 300. Okay. So now that's all of my operating revenues, all of my operating expenses, and my other income. So now I'm going to calculate my net profit or net loss. So in this case, I'm going to select this number here, which is my gross. I'm going to subtract out my operating expenses and add my other income. So what is my total net profit or net loss?
98,2707.
That's okay. Just recalculate it again. Okay. So I started out with 28,000. I subtract 10,000, but I add 300. So I should have 13,719.36 as my total net profit because I gained. This is a positive number. That means I actually profited in this company. After all the struggles that we went through, making faulty payments and overdrafting our bank account, we ended up being profitable. So that's how you compute the income statement, right? All of your revenues or all of your sales, counter out all of your cost of goods sold and cost of material, counter out all of your operating expenses that occurred that month, add any other income, and you should be able to calculate your net profit or net loss. Okay, any questions so far? No? No questions? Okay. So now we're going to be moving on to our statement of equity. Okay? Rule of thumb is that generally, as a small company, you should always try to reinvest it back into your company. Never take out the profits unless you've been doing the business for at least a year or two and it's safe enough for you to pull out money. So in this case, general rule of thumb is we're going to be reinvesting our net income into our company. So that is what this table is, and I added those little, accounts there for you so you have an idea. So I'm going to start off with the first thing is going to be what was our beginning value in equity as of June 1st. Okay, so in this case, we know what that is, right? It doesn't have to be exactly June 1st, but we know that we had an original investment of $30,000. So let's go to my adjusted trial balance, and we're going to go to owner's equity. Okay, here we are, owner's equity. It's valued at $30,000. That's my beginning balance. Okay, things that add to my equity is going to be a net income. So I'm going to actually take this number from my previous income statement, right? Here's my net profit or net income. Okay. I'm going to take that and I'm going to transfer that right over, right? 13,719.36. Okay. Any contributing factors that decrease my equity is going to be an owner's withdrawal. So there we are, right? We took money away from the company. So I'm going to go to my adjusted trial balance once again, and I'm going to pick up that $3,000 because I took away $3,000. Okay? So from here, we're going to go ahead and calculate what is the difference between the net income minus out the owner's withdrawal. So that means my equity should increase by $10,000 and $719. So therefore, my ending balance in my equity as of June 31st is going to be this number plus this number to get me a grand total of $40,719 and 36 cents. So that is my value right now as my company stands as of June 30th. Okay. Any questions about completing the statement of equity? Okay. This number is going to come into play when we complete the next one, which is going to be our balance sheet. So here we have total liabilities. Okay, so I'm going to put right here total equity. Okay. We know what this number is, right? We just solved it from our previous statement, which is the statement of equity, right? Right here, I'm already given one of my parts in the accounting equation, right? Assets equals liabilities plus equity. I'm already given equity. So now I need to solve for my total assets and I need to solve for my total liabilities for this statement to hold true. So first things first is we're going to take a look at all of the items that are going to be my assets. So once again, we're going to go to my adjusted trial balance and we're only taking main accounts, okay? So to make our statements look very concise and very, very nice and neat, I'm only going to be taking main accounts. So first main account is my bank account, right? My bank account right now is outstanding for a total of $13,952.59. Boom. Okay. What's my next asset? Accounts receivable. Okay. For 14,555.35. Okay. What's my next asset? Business supplies. For a total of 5, 10, 10. Okay. What is my total? Okay, what's my next account? We have office supplies, right? For $80. Okay. What's my next account? Inventory for the total of $628.20. Okay. What's my next account? Furniture. All right. For my $8,926. Okay. What's my next account?
Office equipment.
Office equipment. Okay. For the total amount of $2,767.76. Okay. What's my next account? Equipment. Office equipment. Yes, here it is. Okay. What's my next asset? Vehicles is my next one for the amount of 31,951. Okay. What's my next asset? Prepaid for my 6654. And then what's my next asset? Deposit. And I'm going to go ahead and right away. We only have one more left. Okay. So how much was my deposit for? And then how much is my goodwill?
2088.33.
Okay. So here, let's go ahead and equal sum up my total assets. Right? So I have 79,199.50 worth of assets. Okay? Now let's go ahead and go through all of our liabilities. So first things first, what is my first liability? Accounts payable. For the total amount of the 4,534. Okay. What's my next liability? Visa payable. For the total amount of 1,885.89. Okay. What's next? Payroll liabilities for a grand total of okay. What's next?
Sales tax.
Yes, sales tax payable.
Payable.
Oh, what just happened? Okay, hold on. Sales tax payable. I'm gonna change the color because it's not the right color right now. I guess that's one of the accounts I missed. Here you go. So back to my balance sheet. I was supposed to collect my sales tax payable. For the total amount of $2,046.11. All right. And then last but not least, I should have my loans. Okay. And how much was my loan for? Okay. So here you go. I'm going to total up, excuse me, my liabilities. Okay. And then I'm going to total up my liabilities plus my equity to get my grand total of 79,199.50, which, what does that mean? Our accounting equation holds true, right? My assets does in fact equal my total liabilities and my total equity. All right. See, and look how much cleaner and sleeker this statement is. Instead of having listing out all of those little sub accounts, now it's very concise and very shrunken down to the main accounts, which makes it a lot more easier to produce your financial statements. So that's exactly why I required you at the adjusted trial balance is to complete that little thing, sum them up, and make them into main accounts. All right, there it is. We've completed the first three. So we got the income statement, right, tallying up our totals, revenues and expenses, which we got the net income or net profit, which we utilized it into our statement of equity, right, to determine what our new equity is going to be, right? We reinvested it back into the company. Then once we solved for our equity, then we plugged it into our balance sheet, which we solved for the accounting equation was to list out all of our assets, and we're going to counter them equal them to our total liabilities plus our new equity that we just acquired. So here we are done because we solved for the accounting equation. All right. Any questions so far? All right. Everyone good so far?
Yep, no questions.
All right. Last but not least is going to be the statement of cash flows. Now, the statement of cash flows is probably one of the most trickiest statements to complete manually. Okay? Manually, because there are many accounts that you have to really consider how it actually flows in terms of your company. Now, as basic and understanding of how to compute and complete the statement of cash flows is to really understand transferring all of your accrual accounts into cash basis accounts. So, like I've mentioned before, this is primarily geared towards most of all of your balance sheet. So anything that's an asset, liability, and equity account would typically fall under this this little worksheet here. The only thing that you'll have extra is going to be things like net income, any non-cash transactions, because there's no real cash being used in this point. So here, let's go ahead and let's break it down into the three categories. So we have our operating activities, which is normally going to be any current asset, any current liability, and any other asset, okay? Plus your non-cash transactions, which we'll talk about in a second. Then the next category we have here is your investing activities. Your investing activities are going to be anything that you've purchased, such as fixed assets, or sold any of your fixed assets, right? That's what you're going to be investing, hoping that in return that it makes the value of your company become more profitable. And then lastly is going to be your financing activities. Financing activities will involve anything that's going to be a long-term liability. So if you ask for a loan, you received money, right? Anything that affects financing is going to be if you take anything away from your equity, okay? And then, of course, we need to also counter it against our beginning balance of our cash, and then as well as our ending balance in our cash, okay? And that's going to give us our statement of cash flows. Now, I've been doing this with Mr. Sanchez for so many terms now that at the end of the day, our cash flows will never, ever pan out perfectly. I don't know why, but apparently it won't let us. There's a few things that we're missing that I can't find, okay? But I'm still going to show you at least the basics. So if you were to create your own financial statements or your own business, you may actually, compute the statement of cash flows to be able to see how much is your company actually receiving cash. So again, when we create our financial statements, we're creating it for the purpose of as an accrual basis, right? To show that our net profit, right? Look at how much our company is profitable. But with the statement of cash flows, what you're actually going to do is you're going to strip away all the accrual accounts and bring it down to the actual amount of cash you actually have. Also, at the actual cash that's flowing in and the actual cash that's flowing out from your company. So you're going to see a huge drastic difference between a cash basis versus an accrual basis. If you redo your net profits one more time, right, and you do a cash basis, it's going to be significantly lower because did we actually receive all that cash? No, because a portion of those sales were actually on an account. We never received the cash in the first place. Okay, so that's exactly what we're going to do here. So first things first is we got to recognize what our net income is because that's going to be our starting point. Our starting point is going to be whatever we solved for our net income, which we solved for in our income statement. So we are going to start off with our $13,719 and 36 cents. Okay? So the first line of business when we're dealing with our operating activities is going to be dealing with our non-cash transactions. So what is a non-cash transaction? Okay? Anything that's a bad debt, anything that's depreciation, so amortization is included, and anything that we recognize such as a loss. So when those four accounts that we just talked about, so the first one's going to be we're going to recognize our bad debt. Okay, so go to your adjusted trial balance and we're going to pick up that bad debt. Because once again, did we actually receive the cash in the first place to claim that this is a loss? Okay, I'm gonna ask one more time. Bad debt. Did we actually receive the cash for us to claim this as a loss? No. No, we never received the money in the first place. Exactly. It's a non-cash transaction because in this case, we're writing off a cash value. But there was no money that actually came in or came out. So in this case, what we're going to do is we're going to add it back to our pile of money, okay? We're going to add it back in there because this is money that we never collected. It was money that never existed, but we placed it in our book because of the accrual basis, right? We have to assume that we must write off this invisible debt. So in this case, we're adding it back to our cash flows. So let's go ahead and see what that amount was for. It was for $76.60. Okay? Same thing with the depreciation. Did we actually spend money to depreciate our assets?
No, it just happens with use over time.
Yes, this is invisible money once again, right? We bought our asset at full price value. That doesn't mean when you sell it, it's going to lose its value. It only loses its value and you recognize it when you sell your asset. But right now, in my books, it's still full price. So depreciation expense is another non-cash transaction because you're transferring money invisible money to another account. So this is another non-cash transaction. So of course, if depreciation is going to be added back in there, right? Cash that shouldn't be even transferred or spent, you can assume the same thing for amortization. You're going to add it back in there because technically you did not spend $11 to lower your goodwill, right? So all of these are going to be added back, okay? One more thing that we also have to recognize is, what about our loss? So this is actually going to be one of these things that you have to pick out from your adjusted trial balance, is that you have a loss, right? Loss on disposal of asset, right? Because in this case, we lost $2,000 invisibly, right? Because we paid for furniture for $4,000, but we sold it for $2,000. So technically, we lost $2,000 in thin air. Now, is that, if you logically think about this, is it possible, if we have the whole debit and credit system, is it possible to recognize that we lost $2,000? Where did that $2,000 go? Nowhere, exactly. We don't know what happened to it. So this is where we kind of have to understand that we have to add it back in here, because this is $2,000 that we don't have, okay? Or that should be there but isn't there, okay? All right, so those are the main non-cash transactions right there, okay? So now we have to understand the next part. We're going to go through every single one. So I'm going to be focusing on just my balance sheet for now. Okay? So here, obviously I'm not going to recognize my bank because that's going to be at the very end. So first things first is accounts receivable. Okay? Now let's understand this. I have outstanding accounts receivable for $1,455.35. Okay? Now let's understand this. Did we receive this cash or did we not receive this cash? Did cash actually flow in or did cash actually flow out? And in this case, we never received the cash in the first place.
Neither.
Right. Good. We never received the cash in the first place. So in this case, we need to subtract it because we never gained that money. All right? So this is going to appear as a negative amount because we never received the cash in the first place. So we can't recognize it as part of our income, right? It's cash that we never received. So this one. There you go. No. Yes. So it's cash that we never received. Okay, so it's going to appear as negative. Okay. All right, the next account that we're going to be looking at is going to be our business. Oh, wait, I'm on the wrong one. Balance sheet. It's going to be our business supplies. All right? This is money we've already spent. We already purchased these items, right? So in this case, it's going to be negative because we already bought the supplies, right? We spent the money already. So in this case, this number is going to appear as a negative number because we don't have that cash anymore. We can't go back and return those business supplies, right? They've been opened, they've been used. So in this case, this is money that we've spent to buy these business supplies. So that's going to be the same thing for the inventory, right? This is money that we didn't sell our items yet. So therefore, we didn't receive any money because we never sold our inventory items yet. Okay? So I think the next one's office supplies. So again, same concept here, right? We had to spend the money to purchase the office supplies. Okay? So every single line item that we go through, you have to just consider, did we receive cash for it or did we spend the cash for it? And in this case, office supplies, pretty straightforward, right? We paid money to purchase these supplies. Okay, so it's negative. We spent money to buy these office supplies. Okay. Next account's going to be inventory, right? We're going to go through all our current assets and then we're going to go through our other assets as well. So first things first, we have, or the last thing that we have here is inventory. Okay. Once again, we need to consider we purchased the inventory, so we spent the money for the inventory. And the second thing is we never received money for the inventory. So in this case, this is money that's been spent. So this is another negative. Okay? Easiest way to understand that is that you can consider this way. All current assets are going to be negative because they're money that you spent or money that you never received. All right? That's the easiest way to understand how to complete this. All right? So, where am I for inventory? Right here. Okay? It's negative because I purchased the items. So think of all your current assets are going to be negative because it's money that you spent. It's gone. All right? So now that we finished our current assets, the next section we're going to be looking at is going to be our other assets, right? Because our fixed assets are going to be considered investing. So we're going to skip all this. So our first ones are prepaid accounts. Once again, prepaid accounts, we've already spent the money. It's gone, right? We already paid for the rent. We already paid for the insurance. We've already paid for whatever prepaid accounts that exist under there, okay? So prepaid accounts is going to be a negative number because we've already spent the money for it. Same thing with the deposits, right? We had to do a rent deposit. We also had to do, our water deposit, electrical deposit, gas deposit, right? All of those are money that we've already spent. So it's long gone. Okay, typo there. Okay, long gone. We've already spent the money for it. Okay, and then goodwill. Now, goodwill could be either or, because as far as where it's positioned, it could be considered something that you invested in, but it's also a intangible asset. It holds some kind of value, right? So it could be an investing activity if you choose to trade, patent it or make a trademark out of it. But right now, my goodwill, I'm only borrowing the business name. I'm not planning to, market it, or I'm not planning to increase its value. Right now, my goodwill is just because I bought the business short sales. So that means I have extra money. All right. In this case, I'm not building the brand up. I'm not doing anything with it. So I'm going to be considering this as an operating activity. So goodwill, once again, goodwill is money spent. Now, here's the thing here. When we recognize goodwill, we need to recognize it at the amount that we originally purchased it for. So I'm going to go to my adjusted trial balance once again, and I'm going to go ahead and locate my goodwill because I already added back the amortization, right? If I were to add this 2,888, that's going to reflect both my my amortization, and it's going to also double upon that. Remember, we added back the amortization on this. So for us to count it as 2,800 is not true because it should hold at its historical cost value, right? So this right here is reflecting that I still have the whole amount and I added back my non-cash transaction. So in this case, it must be like this, okay, at its original historical cost value. Okay. okay? Because that's what you purchased the goodwill for, right? All right, I think we have a couple more to go through, so let me add just an extra line just in case. So next one, so now that we finish our assets, the next one we're going to go over is going to be our current liabilities. So let's understand this, okay? Accounts payable, okay? It's outstanding for $4,534.70. Now let me ask you this. Did I actually pay this off? Did I pay $4,534.70?
No.
No. So that means I still have the money. So I need to add it back to my cash flow because I never spent the money. Okay? Same thing with my Visa payable, right? Did I pay for my Visa payable yet? No. So I need to add back that money because in accounts payable, right, it's assuming that you owe this person money, so therefore you're going to eventually pay it off. In this case, right, I'm going to recognize that I didn't even spend the money yet in the first place. All right, so anything that's a current liability, you can automatically assume it's automatically going to be added back to the cash flow, okay, because it's money that you owe, right? If you didn't pay them, then you still have that money. So the next thing that we have here is sales tax, is payroll liabilities. Did I pay the government yet?
No.
No, not yet. You didn't pay for having employees yet. Same thing with sales tax payable. Did I pay the state and local agencies their sales tax yet? No. Okay. So therefore, I need to add back that money. Okay. There it is. So this is now your total operating activities. So you can sum it up right here. Okay, I think I hit it. I don't know why. So make this visible. So if I sum up my operating activities real quick, right? You should get a positive number. Okay. Okay, which I do. I get a positive $33,044.64. So what that means here is I'm going to add these values together. So my net income, all right, I'm going to add my total operating to get a positive $16,764 even. Okay, so once again, I'm going to add these numbers up together because this is my net operating activities. So here I've added all my cash values together. I subtracted all of my current assets and other assets. And I've added all my current liabilities to get me a positive $3,000. Okay, and then I'm going to add them together because it's net, right? We're not going to subtract for any reason, right? It's going to be the sum or, whatever it is, right? It's added together because this is a positive number. Okay, so that's your net operating activities. Now we're going to be looking at investing activities. So once again, what did we invest is going to be anything that's going to be considered your fixed assets. So first things first is, let's take a look at our balance sheet, right? These numbers reflect the market value, the book value of all of the items that we purchased, right? But I'm just going to utilize this to grab their titles from, okay? Or actually, I could do that from the adjusted trial balance. So here, once again, it's going to be anything that you made purchases for. So, what was my first purchase? Okay, let's go take a look. Okay, I've purchased in my fixed asset. The first thing I have here is going to be I believe I purchased furniture. Okay, we purchased furniture. Okay, we also purchased office equipment. Where's my office equipment? So furniture, we purchased office equipment. We also purchased regular equipment. Okay. And we also purchased a vehicle. Okay. Now, once again, if you purchase the items, do you have the cash? No, we spent the money, right? So the whole purpose of investing is it's going to reflect your hopes of getting cash back, right? Residual value, right? By making investments. So in this case, we spent all of our money to make these purchases. So that means all of these values that you see here are going to reflect as negative values. So we purchased furniture, right? Now, we need to reflect the historical value. So this is where I need to go to my unadjusted trial balance for a second and pick up the total for my furniture, because if I look at my furniture here, right, I haven't even calculated my depreciation yet. Right now, my unadjusted trial balance reflects my historical value of everything. So my furniture right now should be $9,033.75. And it's negative because I've already spent the money for it. Same thing with office equipment, right? We spent the money to purchase a total of $2,863 worth of office equipment, right? We've also spent, we've also spent a total of $8,650 worth of regular equipment, okay? And lastly, how much did we purchase the vehicle for? Okay, go to your unadjusted trial balance. We originally purchased it for $32,208.90, okay? All of these are going to be negative values because we've already spent the cash. We don't have it, right? So that is the idea here, that all fixed assets are going to reflect as negative because you spent the money already. It's gone. Okay? The last thing that we have to recognize is we sold furniture. Okay? If you guys remember way back when we acquired the business in the first place, we end up selling. So we, I'm going to write sold furniture. Okay? We gained money, right? This section right here is investing. Did we sell our assets or did we purchase assets? In this case, we did sell an asset, right? That's why we have at the very top a loss on disposal of the asset, because we acquired it and then we sold it, right? And in this case, if you guys remember, we sold it for $2,000 cash. So we acquired it for $4,000, but when we sold it, we got $2,000 out of it, but we had to recognize that we lost $4,000 out of it. Okay? Same thing here with the historical cost value, right? Because we've already added back the depreciation. So therefore, it should be reflecting at historical cost value. Okay? Last but not least, let's go ahead and equal sum this real quick. to get our total net investing activities. Okay, so we got equal sum here. Let's make sure I'm in the right box. Equal sum. Okay, and what is my total investing activities?
Negative 57, 56, 71.
Good, excellent. So typically, usually, your investing activities should reflect a total negative value because, once again, this is money that we spent. Okay, so in this case, we're going to counter against it. So we're going to take my net from investing, or I'm sorry, net from operating, right? We're going to take this number right here because this is the total from my net income plus this $3,000. So this is my net right here. I'm going to take this value right here and I'm going to, in this case, add, because this is a negative already, to bring me down to a negative $33,992. Okay, so that's after you've spent all this money to invest into your company. Okay, so don't worry about that number because, once again, this is only from investing. Okay, so now I am going to insert another line here, and now I'm going to calculate all of my financing activities. So first things first is my financing activity is going to reflect any long-term liabilities. So in this case, I had a loan. Okay? How much money did I get from the loan?
No, 29, 221.90.
Right. Because we got a loan, we received cash. We got money. So that's going to be added to this pile here. Okay? Other things that we have to look at is going to be my owner's withdrawal because that took away money, right? That's part of my financing activities, right? If I did capital contributions, then I invested more money into the company. But this time I took away money because we needed to pay ourselves, right? So in this case, we're going to locate my owner's withdrawal. Oh, I think I have the account. Yep, owner's withdrawal. And this time it's going to decrease because I took money away from the company, right? So it's going to be a negative 3,000. So once again, let's go ahead and add these two values up together. So what is my total financing activities?
$26,221.90.
And then we're going to counter it against one more time. So we're going to take my net from investing and we're going to add my financing to get me a difference of $7,770. So this number right here, right, is going to determine the difference between your beginning value from what you started with to your ending value. And this is where our numbers never match. So, but I'm just going to show you exactly how it's supposed to happen. So, when we started with our cash as of June 1st, right? If you guys remember way back when, we started the company out with $21,625, right? because when we acquired the business, it cost us $8,000. We had to acquire the business license and permit for $375, so that took it out the money right there. So this is what we started out when we began the company, was $21,625. Okay, and then now we're looking at how much cash we actually have. So let's go to our balance sheet, right? How much money do we currently have right now? We have $13,95259. All right. Now, how we solve this is you're actually going to, so you're supposed to take your beginning and you're supposed to subtract the difference out to get the 13,000. So right here, I'm off by a lot. Okay. So again, this is supposed to reflect this number here. Okay. But I'm gonna place what the actual number is supposed to be. So we're supposed to take our beginning balance and we're gonna add our difference to get 13,000. And I'm gonna see what the difference between this is. Okay, so we're off by $98, and I don't know where this $98 came from, but that's as close as I can get to completing the cash flows, statement of cash flows. Okay, so this $98.40 could be somewhere lost in transaction. I have no idea where it is, but I can tell you this is how you're supposed to figure out how the statement of cash flows is supposed to be. Everything that you've listed out here, whether it's operating, investing, or financing, should give you this difference amount. And this difference amount is supposed to go against your beginning balance in your cash, which we know, right? We started the company out with $21,625. And when you add these two values together, it should give you your ending balance in your cash as of June 30th. Okay, but in this case, I did not match. Okay, I'm off by $98.40. Okay, all right, but that's how you do the statement of cash flows. Any questions? Okay, all right, here's a relief for you. I will not test you on the statement of cash flows, because once again, it's one of the tricky ones because you can miss a very small detail, or you might have entered in something that isn't, or there could be something that you're missing in there. So once again, I'm missing $98.40. So I'm not going to test you on this because it is kind of tricky to determine whether you need to add the cash back or spend the cash, or the cash flowing in and cash flowing out. So once again, this one's going to take probably the longest to compute, just because you have to literally take every account and think about it. Are you adding the cash back or are you subtracting the cash? So like I said, I've mentioned through every single one, right? I asked you guys, if I'm investing in furniture, did I spend the money or do I have the money? In this case, we spent the money. So I'm not going to test you on the statement of cash flows. However, I will test you on the on the three primary ones, right? The income statement, statement of equity, and the balance sheet. You need to know those three. They're the easiest ones to formulate if you correctly have your adjusted trial balance. Everything else is you just put the pieces together and it should match everything, okay? So once again, balance sheet, right, consists of all of your assets and your liabilities, and you got equity, which you solved for in the statement of equity, right? Then this net income came from my income statement. So they all are connected. Now, if you computed your income statement and you get this wrong number and you proceed to go ahead and complete the rest of your financial statements, you will see that your assets and liabilities and your equity will not match. Okay? All right, so once again, I will not test you on the statement of cash flows, but I will test you on the income statement, the statement of equity, and the balance sheet. All right? Any questions?